Hello everyone, I am Pratap here. We are at lesson 27. This lesson 27 is about zone confluence together with EMA confluence strategy. In this strategy, you will be learning two important sub-strategies, and we will be discussing those strategies in detail with examples. So what is this zone confluence with the EMA confluence strategy? First, you must understand it is a very important strategy in finding high probability zones. Please don't mistake here. It is not a high liquidity zone. I am saying high probability zone. What is high probability zone? The chances of getting success is much better. Chances are nothing but probability. The probability of getting success. Because this strategy, zones identified based on this strategy is having better success rate. We are calling this strategy finds high probability zones. How it will find? That is what you are going to learn. We already learned the concept zone confluence in lesson 16. We also learned the concept EMA confluence in lesson 17. So we are combining both the concepts. For defining the zone confluence plus EMA confluence strategy, we are using two sub-strategies. One is LTF plus ITF zone confluence with ITF EMA 20 confluence. You should not forget here. This is not LTF EMA confluence. It is ITF EMA confluence. That is what you have to understand. You already learned LTF, ITF, HTF zones. Lower time frame, intermediate time frame, and higher time frame in our earlier lessons. I think in lesson 11, 12, you learned those concepts. So, we are using zone confluence plus LTF and ITF time frames, and the ITF time frame zone should be having ITF EMA confluence. That is the first strategy, sub-strategy. And another sub-strategy is HTF, ITF and LTF zone confluence with HTF EMA confluence. How exactly? We will discuss with examples, then you will get better clarity. Before that, we will learn few important theoretical points. This strategy is built by considering the points. ITF zone might be having stronger order flow compared to the LTF zone. You all agree with this? And also, HTF zone might be having stronger order flow compared to ITF zones and LTF zones. And more importantly, the chances of reaching the LTF target zone. Which target we are referring? Not ITF target or not HTF target. We are referring LTF zone target. The chances of reaching the LTF zone target is much higher if the LTF entry is from either HTF or ITF zone. And also this HTF or ITF zone should be having HTF or ITF EMA confluence. These are the conditions. You have a ITF zone. Inside the ITF zone, you have a LTF zone. And the ITF zone is also having ITF EMA confluence. Prices reached the LTF zone, which is a part of the ITF zone. If that is the case, the chances are very high. The entry taken at that LTF zone, which is part of the ITF zone, that entry, there are higher chances of reaching the LTF target zone. That means getting stopped out, the chances are less. I am not saying Your orders won't be stopped out. There are times they will be stopped out. There will be reasons for that. But here, chances of getting success is higher in this kind of setup. That's why you are learning this strategy. So I repeat this point. The chances of reaching the LTF zone target is much higher if the LTF entry is from HTF or ITF zone, and also having the HTF or ITF zone having EMA Confluence. Okay, now look into this example, you will get better clarity. What kind of zone it is? This is a ITF demand zone. Same concept you can also apply to supply zone. That's why I am not giving you multiple examples. But please understand, whatever you are learning for the demand zone, same concept as is, you can apply to the supply zones also. Okay, here I am talking about ITF and LTF demand zones. But which demand zone it is? This is ITF demand zone. It is not LTF demand zone. Currently what I have drawn is ITF demand zone. This demand zone is having ITF EMA 20 Confluence, or simply we say ITF EMA Confluence. What is the EMA Confluence currently? The EMA is at the ITF zone. Okay, this EMA can be exactly in the middle of the zone, or near the distal line, or near the near the distal line, this is the distal line, or near the proximal line. It can be anywhere, or slightly it is before the distal line, or slightly it is above the proximal line for this demand zone. Slightly above or below also you can consider as a EMA Confluence. These concepts I already explained in detail in lesson 17, but I am revising the concepts because some of you learned a long back, you might have forgot some important points. This is how you should understand. Hope till now it is very clear for all of you. Okay, now the most important thing is, inside this ITF zone we have a LTF zone. It need not be inside the zone. It can be overlapped at the proximal line, or also it can be overlapped at the distal line. Anywhere it can overlap. It can be exactly in the inside the zone, or it can be overlapped, or it can be at the proximal or distal line. Anything you can accept, or anything we call it as a zone confluence. In simple English, what is zone confluence? The lower time frame zone is part of the higher time frame zone. Here it is ITF demand zone. So this is the LTF. LTF demand zone is a part of the ITF demand zone. If it is a supply zone, it is part of the ITF, LTF supply zone is part of the ITF supply zone. But remember, we are not talking about demand zone with supply zone. That is a wrong way of understanding. Demand zone with demand zone. That means lower time frame demand zone with intermediate time frame demand zone, or lower time frame supply zone with intermediate supply zone. It should be a part. How it can be part? If it is overlapped with ITF time frame zone, that is called as a part of the zone. Part of the zone is general English, simple English. Sometimes technical words may give you confusion until you are comfortable with the terminology. That's why in simple English, LTF zone is a part of the ITF zone. That is what zone confluence. Okay, now you may get a doubt here. This EMA confluence, also it should be having confluence with LTF zone? Need not be. It can be or it cannot be. But it should be having a confluence with ITF zone. That is important. The fine-tuned zone may have the confluence or may not have the confluence. Our focus is only on the ITF, but not LTF. But entry is at LTF only. Why it should not be having confluence with the LTF? See, many times this ITF zone, EMA confluence movement is very, very slow. By the time it reaches LTF, prices enter into this area and it will push the prices up. So that's why here the most important thing is EMA Confluence. Generally EMA Confluence, what happens, why we are using EMA Confluence? Because we will be, when there is a price over extension, you already learned price over extension. What is price over extension? Prices are moving far away from our zone. Here we are talking about ITF zone, far away from the zone. When there is a price over extension, the general tendency is it should complete the overextension. Why it should complete? Because after reaching far away, people will be having fear in their mind, fear of prices will go down. If prices are going down and their profits will reduce, and what they do, they will start booking the profit. When they start booking the profit, selling pressure will come and slowly prices will be coming until this EMA line. Why from EMA line again it is started moving up? Because once they reach the EMA, people land from the fast. Prices again after reaching EMA, it will be started moving up. Okay, here one question you all should get. Exactly it will touch EMA line and move up? No. Sometime before the EMA line, prices will be starting moving up. Sometimes maybe they touch or very near to the EMA line, it will touch and again it will move. Or sometimes prices go a little below the EMA line. A little below. Some small percentage it will go below the EMA and again it will be started moving up. But definitely, exactly at the EMA line or a little above the EMA line or a little below the EMA line, our lower time frame zones will be there. Those zones will provide support for your trades. That way your trades will be having higher chances of getting success. So this is the reason why we are not looking for EMA Confluence with lower time frame. We are looking for ITF EMA Confluence with ITF demand zone or HTF EMA Confluence with HTF demand zone. That we will see in the next example. First, let us talk about ITF. So somewhere it should have the zone confluence. Need not be exactly in the lower time frame zone, which is having zone confluence with ITF time frame. Hope I made it clear. So that's why, because I made it clear, I did not draw this EMA line inside this LTF zone. Otherwise, you will always assume it should be there inside the LTF. No, it need not be. It should be outside, or it could be inside, or it could be above, or it could be below. Anything will possible. First of all, what is the point I told you? This ITF EMA Confluence, even it need not be inside the ITF zone. A little below or little above is also acceptable. That is also we considered EMA Confluence. But the rule is ITF zone should have ITF EMA Confluence. It is a very strict rule. I repeat again. The ITF zone should have ITF EMA Confluence, but inside the ITF zone, the LTF confluence should be there. Inside means either at the distal line or proximal line or exactly inside, anything. It should overlap. Okay, hope now you got clarity exact what exactly this LTF plus ITF zone confluence with ITF EMA confluence. Okay, such kind of confluence is there. What will happen? Such kind of confluence indicates the order flow is very strong and there are higher chances the prices will be reaching the target zone. Look into this. Here we have a target zone. Which target? LTF zone, because we are taking entry at LTF demand zone. Mostly you keep your target at the LTF supply zone. See, now prices entered into the LTF demand zone, which is a part of the ITF demand zone. You may ask a question. Do we need to really take our entry at the LTF zone? Can't we take at the ITF zone? You can take ITF zone also, but risk will be very higher. That's why to minimize the risk, always we take entry at the LTF zone or fine-tuned zone inside the LTF also we will take. Sometimes we may not take exactly in the LTF zone. Inside, in case if the LTF zone risk is very high, you will further fine-tune. one time frame below the LTF or 2 time frames below LTF zone, you further fine tune, there you take the trade. Why? To minimize the risk. Because we can't take our risk beyond 2%. Why we kept this point? To protect our capital in case if our analysis goes wrong. That's why supply demand zone traders are always successful traders. They always earn some profits. Even if they get some of their trades are stopped out, still they will be in profit only. They won't be losing their capital. Because of the risk management we learned in our concept. Okay. Now there are higher chances in such kind of situation. Which situation? The ITF EMA Confluence and ITF zone is having LTF Zone Confluence, entry from the LTF zone and target to the LTF zone. In such kind of situation, the probability is high for reaching the target zone. That is the reason why we are learning this strategy. Okay, let me summarize few important points. In general, LTF zone having confluence with ITF zone might be having stronger order flow compared to the LTF zone outside the ITF zone. Outside means not having zone confluence. And LTF plus ITF zone confluence with ITF zone having ITF EMA confluence might be having even stronger order flow. That's why it is having higher success rate. Because more people keep their order flows near the EMA. That's why more order flows will provide you higher success rate. Okay, that was the first variation. Second variation. In our strategy, we have 2 variations. First variation is LTF plus ITF EMA. And second variation is LTF plus ITF plus even HTF zone confluence. And HTF zone is having HTF EMA confluence. Earlier, we were primarily focusing on ITF zone and ITF EMA. Now we are focusing on HTF zone and HTF EMA confluence. Still we take our trades in LTF zone only, but the LTF zone is a part of the HTF zone. How it should be part, that I will explain. First look into this HTF zone. This is the HTF zone, and this HTF zone is having HTF EMA confluence. As I told you earlier, the confluence, zone confluence, EMA confluence can be prices. EMA should be inside the zone or a little before the zone or a little outside the zone. We consider it as a EMA confluence, either way. Okay, now this HTF zone is having HTF EMA confluence. And inside the HTF zone, we have ITF zone. That means ITF zone is having confluence with HTF zone. Now again, inside the ITF zone, we have LTF zone. Inside means maybe exactly inside the zone or overlapped with the proximal line or distal line of the ITF zone. Either way we consider. Same is the case ITF zone also. ITF zone could be exactly inside HTF, or maybe it is having overlapped at the either proximal line or distal line of the HTF zone. Either thing is accepted. Okay. And such kind of LTF demand zones, we already gave a technical name. What is the technical name? Fine-tuned zone. This LTF demand zone is a fine-tuned zone of ITF. ITF is again a fine-tuned zone of HTF. You already learned in lesson 16 how we fine-tune the zones. Okay, but where you need to take your entry? Obviously, our trade will be planned from LTF zone. If you feel LTF zone risk is very high, further we will fine-tune LTF zone with time frames below that zone. You already learned all these concepts. Many of you already practiced these concepts and also doing real-time trading. Some of you are now learning these concepts and practicing. Okay, now this HTF zone is having HTF EMA Confluence. Like as I told you earlier, there is no rule that HTF should be inside the LTF fine-tuned zone. There is no rule. It can be anywhere. But HTF zone should have a confluence. Maybe at the proximal line or a little below the proximal line or anywhere inside this HTF zone, or maybe at the distal line, or maybe a little above the proximal line, or a little below the distal line. Anything is valid. Okay. So this is in such kind of situation, if you are taking your trade from the LTF zone. Now see, now we have a LTF supply zone, that is the target zone. Now prices reached the LTF demand zone. If you take a trade from this LTF demand zone, there are higher chances prices will be pushing up to the LTF supply zone, that is the target zone. That means chances of failures are less. Hope you got the clarity. LTF, ITF and HTF zone confluence. But here sometimes you will be facing some issues also. What is that issue? I will explain in the coming slides. Currently I'm showing you all the positive scenario. But sometimes you might be having a negative scenario. That also how to handle I will explain. But before that, let us summarize this, whatever we discussed here. In general, LTF zone having confluence with ITF zone and HTF zone might be having stronger order flow compared to the LTF zone confluence with ITF zone or LTF zone which is outside the HTF zone. Because we already learned ITF is having more order flow compared to LTF and HTF is having even more order flow compared to ITF. In the beginning, we already summarized those concepts. Based on this, we have formed this statement. We made this statement. And LTF plus ITF plus HTF zone confluence. What is LTF plus ITF plus HTF? The meaning is inside the HTF, ITF should be there, and inside the ITF, LTF should be there. Inside means overlap. Either inside exactly or maybe in the near the proximal or distal line overlap should be there. Okay, this is LTF plus ITF plus HTF zone confluence with HTF zone having HTF EMA confluence. All the three are having confluence, but the HTF zone should have HTF EMA confluence. In such kind of scenario, the success rate is high compared to the other scenarios. Of course, in these scenarios also, zones will be violated. Rare situations, especially when trend changes are taking place. Trend is about to change. At the time, prices are at that higher time frame zone. There are higher chances, higher time frame zone will be violated. Because HTF zone trend changes won't happen very frequently. Rarely it happen. Unfortunately, if you took the trade in those rare situations that time you will be seeing some stopped out trades. But remaining situations, there are higher chances of getting success from ITF zones or LTF zone having EMA confluence. And the next scenario, multiple order flows. Sometimes you may face some problems when multiple order flows are there. What exactly it is? See, here you have a ITF zone. Same concept you can apply to even HTF also. One example is good enough. That's why I have taken ITF and LTF together. But please understand, whatever the concept you are learning, same concept as it is, you can apply to even HTF zones also. Okay, in this ITF demand zone, assume you have two LTF demand zones are overlapped. Of course, this overlap happen exactly in the middle. I mean, not middle, inside the zone. Or overlap happen one zone at the proximal line and another zone inside the zone, or maybe one zone at the proximal line and another zone is at the distal line, or maybe one zone is inside and one zone is overlapped at the distal line. Anything will happen. Or even you might be having 3 order flows or 4 order flows, multiple order flows. That means multiple LTF zones might be available. Anything is possible. In such kind of situation, where you need to plan your trade, because many people will be having. See, you have to plan your trade, whichever that comes first, there you have to plan. In case if it is violated, you have to accept the stop loss. Immediately, the next LTF order flow, you have to plan the second trade. If first one is stopped out. See, you have 2 possibilities here. What is the first possibility? Prices enter into this LTF zone. Definitely you have to plan a trade. And immediately it reached and started moving up and reached the target zone. So it's a profit for you. Next time this LTF is violated and prices comes into LTF demand zone, again you will plan second trade. This is one possibility. Another possibility, prices entered into this LTF demand zone first time, you plan your trade, but unfortunately prices did not move up, instead further it went down and reached the second LTF zone. But before that, before reaching second LTF demand zone, probably your stop loss would have been hit. If both are very near, probably your stop loss would have been hit and you will exit your stop loss and then you will plan your trade from the second LTF demand zone. If they are very near, it is like a LOTL scenario. At the time, probably risk management, probably different skills you have to use for planning your trades. But the point you have to understand, if first one is violated and if your stop loss is hit, you should not run away. You have to wait for the next trade. Why we should not run away? Because the loss you are getting is a very minimal loss. It is not beyond 2% of your capital. Still your capital is good enough to plan your next trade. Probably whatever the loss, small loss you got from the first zone stopped out, whatever the value, probably you will recover in the second one. You may ask a question, do you give guarantee second one will definitely work? No, nobody can give guarantee. Maybe the second one also will be violated. That day could be a little bad scenario for you because 2 orders might have been stopped out. Sometimes 3 also might happen. But you should not lose your hopes. Why? Because chances of failure is less in this scenario. Failures will happen, but chances are less. Probability of getting success is high. But don't compare with the high liquidity zone success. High liquidity zone intraday strategy, whatever you land, HLQ zone strategy, that will give you more than 80% success rate. So far, no other concept in supply-demand zones has given that much success. Definitely less than 80%. Even in supply-demand zone, 50% success rate also will give you very good profits. Because the 50% success rate, your profits are at least minimum 3 times will be there. Compare it to the one-time failure. That means if 50 times your stocks are failed, you get 50 times loss. But remaining 50 times your stocks got the profit. You take minimum 1:3 RR. So definitely minimum 3 times, another 3 times profit. So 3 minus 1, still you are 2 times profit you will get. Even 50% success rate. How we can further improve that 15% success rate so that we can get even more better profit. For that point of view, you are learning all these concepts. That's why losing some money or losing some trades is part of our game. And that loss we are minimizing by using our risk management concept you learned. That is the beauty of supply demand zone price action. You might have already experienced it. So that is the reason why even if the first LTF zone is violated, that means first order flow is violated, still you will accept and you will be ready for your trade in the next order flow. And this time the second LTF zone will push the prices up. We will see such kind of practical example also in the practicals discussion. I will be showing you one such kind of example. Recently happened. We will discuss. Recently means during this last week. Hope you got the clarity. When you have multiple order flows, definitely you should plan your trade in the first order flow. If it is not violated, you get good profit. If it is violated, next order flow, again you will plan the order, your trade. Even though your first order flow hit the stop loss, because that is very minimal, your capital is still good, and then you plan a trade. This time, whatever you get a good profit, and whatever the loss you got earlier, you will easily recover, and more profit you will get now. So such kind of decisions you have to take. That's why setting your mind is very, very important. Your psychology, human psychology, a trader psychology, how well you are managing is important. Anyway, all these things you will slowly see. Everything won't happen in a single day. Slowly, step by step, your experience grows. Your mind also will think in a better way, and you will control your mind in a better way. It happens over a period of time. It will take 1 to 2 years time, and then you will act like a pro trader, professional trader. Okay, this is about multiple LTF order flows. Now let us look into the practical examples. We will take the help of NeoStock scan reports in the recent time. During this last week, scan reports we will take, and we will see. We will look into different examples based on one MIT trade or one WIT trade and one DIT trade. We will take the examples and we will inspect how this strategy is working, how it is providing results. And also remember, NeoStock software is having this entire intelligence. It will analyze the stocks. See, if it is analyzing all these stocks, especially finally EMA Confluence, if you are applying at ITF level or HTF level, how many stocks it is giving? Hardly 3 or 4 stocks. In those 3 or 4 stocks, we have real chances of getting better success. Of course, those zones will violate when during the trend changes. When trend changes happen at that time. Trend changes happen rarely. It won't happen every time. Until then, you will enjoy the profits. So our software is having intelligence. That is the reason why everyday reports, we are filtering the stocks based on this strategy. The bullish and bearish trade setups, I'm filtering the stocks based on the zone confluence, and then I'm adding EMA confluence and further filtering the stocks. And you can look into our NeoStock old reports. I'm giving you the old reports, at least last 1 week or 10 days old reports I'm publishing for your learning purpose. Of course, they are all premium reports. Still, I am providing you with a delay of 1 week or 10 days. So that people will be learning by referring those zones. They are not for planning your trades. They are for referring and then understand the system. Of course, so far you haven't learned this strategy. Probably how effectively you have to use those zones, you may not be knowing. Now after the practical session, because in the practical session, I'm going to analyze 4 stocks in this video. And that will give you better experience and better knowledge. Many of your doubts will be clarified during this because I'm analyzing from the scratch. First of all, where to find? Suppose if you don't know where these NeoStock reports are available, it's very simple. You can go to our NeoStock YouTube channel. At our channel homepage,
Hello.
Okay, at our channel homepage, this is our channel homepage. You click on this video section. Just click on this section. And here all the videos are available. Whatever the videos. But here you see the report videos. 19th November report video. 18th November report video. Because you are getting these reports with a delay of 1 week or 10 days. This is 14th November video, 13th November video. Refer these videos. Understand how we are filtering the stocks and we are providing. Okay, after getting the stocks, how to use them, that is also very important. That is also very, very important. Many people, they get the reports, but you don't know how effectively you need to analyze them. That's why I'm analyzing 4 stocks today. Out of 4, 1 stock is nearing to the zone. Probably that analysis might be available to some of you people in the coming days to plan some trades, short-term trades or long-term trades. And the first stock is about OFSS. How I selected this stock? From this report. When is this report? On 26th. Our software generated this report on 26th 11. 11 means the November month. We just completed this month on 2024. And what kind of report it is? It is a WIT report. Why WIT report? Because the entry time frame here it is showing 75 minutes. The entry time frame means LTF. Our LTF zone is 75 minutes. Because always our reports displays the entry zones, not ITF zones or HTF zones. Because that is the zone we are planning our trade. That's why they are important. Once LTF zone is identified, in a reverse way, easily you can identify. Generally, we do top-down analysis, right? So our software also does this top-down analysis and identifies, gives you the LTF zones. Now you do the reverse engineering. What is reverse engineering? Now instead of top-down, you do bottom-top. Because bottom already given by the software. You don't require to spend our time in the top-down analysis. All our time is saved by the software. Now it is very easy for us because we identified the actual zone. What kind of zone we identified? For that you can look into the search strategy. So this is the search strategy. In this search strategy, what it is saying, our entry zone should be demand zone because we have supply zone as well as a demand zone. Which zone you have to take? The entry zone. The entry zone should be demand zone. I still remember couple of our members made a mistake earlier. Instead of taking entry at the demand zone, it took the entry in the supply zone. So that's why, be careful. Understanding in this report what is our entry zone is important. That's why always such a strategy displays our entry zone. And it is having zone achievement, violated opposing zone. And also this is having, all these zones are having odd and enhanced score 12. Because these are the search filters we used for finding these stocks. And also the bullish or bearish trade setup, we identified at 75 minutes entry zone, we are selecting bullish. So that means we generated a bullish trade setup stock. But entry zone 75 minutes. That means it is a WIT trade, weekly income trade. 75 minutes is entry is weekly income trade. That way you have to understand which income trade you are using. Based on the entry time frame, you will understand. But is it bullish or bearish? That is what it is showing, bullish. It is a bullish trade setup. Always the demand zones we take bullish trades, supply zones we take bearish trades. Okay, what kind of additional important points we used? We used our strategy, what you are learning today. And the strategy says demand zone confluence, daily plus 75. We have 2 strategies. LTF and ITF strategy with EMA Confluence. Another strategy, HTF, LTF, ITF, HTF plus EMA, HTF EMA Confluence. So I used in this example, I used the first strategy, LTF and ITF Zone Confluence. What is LTF? 75 minutes. One time frame higher is ITF. What is one time frame higher? Daily. So that's why, that means all these demand zones, all these demand zones in all the three stocks, the demand zones are part of the 75 minutes demand zones are part of the daily demand zones. That is what zone confluence. Because 75 minutes demand zone is part of the daily demand zone, we should rely on the daily EMA confluence. So that's why we are seeing as EMA confluence. See, EMA confluence, which zone you are using? Daily zone we are using. Which daily zone you are using? Daily demand zone we are using. Daily demand zone having daily EMA confluence. DEMAC means daily EMA confluence. Understand the abbreviations properly. You have to observe. DEMAC, daily EMA confluence. WEMAC means weekly EMA confluence. MEMAC means monthly EMA confluence. This is the way you have to understand the abbreviations. Okay, anyway, here we are using daily EMA confluence. The reason is our entry zone, 75 minutes demand zone, is part of the daily demand zone. That means zone confluence. Okay, in all these stocks, all the three stocks, they have daily, all these 75 minutes demand zones, they have daily demand zone confluence. That is the beauty of our software. It identified all these combinations. It performs the checks and identified these zones as bullish trade setup zones. It uses a price direction, it uses a trend, all these concepts, and a location, that is nothing but curve. All these concepts of software uses. Apart from it is also using zone confluence. Apart from that, it is also using EMA confluence. Which EMA? ITF EMA, because we are using LTF and ITF demand zone confluence in this strategy. Okay, let us verify our software properly did everything or not, especially zone confluence and EMA confluence. Okay, let's get into the OFSS. What is the entry zone? This is the entry zone and this is the target zone. But remember, target zone will be changing from time to time. Why time to time it will change? Because this is the report generated on 26th. By the time prices reaches today or the actual day when trade happened, new supply zones might have created. That means target will change. When target is changed, are you getting minimum RR? If you are not getting minimum RR, how we can achieve by fine-tuning the zone? All these concepts you learned in the earlier phase 2 training program. But anyway, I will be showing you all those things because some of you are still after learning making mistakes. So that's why this is the best session to rectify all our mistakes. Right from the scratch, whatever the mistakes you make, everything I am showing. See, whenever the day our software is giving, you draw the zones. But you may get this trade only after 1 week or 10 days or 15 days. There is no rule that immediately will get. Because these are not the intraday trades. These are the swing trades or short-term income trades if it is DIT. But it is 75 minutes entry zones means it is a swing trade. It is a WIT trade, weekly income trade. Your trade, you may not get the trade on the same day, next day. You have to wait until prices are reaching. But at the time of reaching, new supply zone is created, and if you don't have proper RR, even after fine-tuning, then you have to leave that stock. There is no other option. But the day when it is generated, the report, at that time, whatever the supply zone is there, target zone, based on that, it selected the stock. But the day when price is reaching your zone, same target might be there or your target might be reduced. Anything will happen. So that's why let us assume I have drawn this zone on 26th. On 26th November I have drawn this zone. Let us assume. Okay, this is the latest price. Forget about it. This is the latest price. But when the zone was created, on 22nd November, the zone is created. The 75-minute zone, entry zone. See here, the entry zone, this is a high liquidity demand zone. But we are not using HLQ strategy, please remember. This is the 22nd, 11, 10:30, you have zone. But our software is, report is on 26th. But our trade will be maybe after that. Maybe next day or after few days. Or even after 1 week may happen. Okay. Anyway, here we have drop candle on 22nd as per our software, 3 base candles and a rally candle. See, this is the hidden zone. This is a hidden candle, leg out candle, because we need to add the hidden body. Such kind of zones, more strong order flows will be there. Our software is having that kind of intelligence. So it identified the hidden zone. And the prices came. But before, just forget what happened. Where you need to plan your trade. This is your trade. And this is your target as per 20, when we took the report, 26th. As per 26th April, this should be our target. But when prices reached the zone, the prices reached the zone on 28th November. After 2 days, prices reached into this zone. It gave a trade. And still the same target is valid. The time prices are entering or new supply zones are created. That is what you need to observe. See here, new zone is created. You have a drop, base, drop. Because the candle is a little bigger, up to type 2 proximal we can target. See, it is achieved. Many times it happens, it reaches. So this is the supply zone. This is the revised supply zone. This is the supply zone at the time of report generation. But by the time prices reached this target, the supply zone. Actually, the trade is completed. You took the trade. You might have taken a trade. You might have taken a trade. But whatever it is, whether you have the RR or not, still you need to exit when prices are reached here. Because a new zone is created. See, this candle is not completed at the time of taking the trade. But risk is very high. Because risk is high, what you do? You make it type 2 proximal. That way, in type 2 entries, some people will take, and instead of exit here, you will exit here. You may say RR is not there. RR is not there that you identified after taking the trade. Because after taking the trade only this candle is completed. Sometimes what happens? Prices may sharply move. This candle may not result as a leg out candle. At the time, this zone is still valid, our target zone. When a new supply is created, a new order flows are here. These order flows may not let the prices go above this zone sometimes. So that's why whatever the profit you get, you have to take and you need to exit. But still this risk might be beyond our 2%. May happen, right? So at the time what we do? We go for our concept fine-tuning the zone. Go to 15 minutes time frame. Is there any 15 minutes order flow is available? Yes, here we have a 15 minutes order flow. We can consider this as a drop, 2 base candles and rally. So this is the way the 15-minute zone you can draw. Inside this 15 minutes, there could be a 5 minutes. See, there is no rule that you have to go up to this 5-minute zone. You can take a trade in 15-minute zone itself if you get your profit. See, again, this is a rally candle, failed ERC candle. Rally means dynamic viewpoint of view, big candle. And 1 base candle, again 1 medium size candle, part of the base. Or another medium size candle, part of the base. That way you can plan your trade like this. And where you can plan the trade? Maybe in this 5-minute zone, if you feel risk is high. If your risk is not high, you can plan your trade in this 15-minute zone. Still, if you feel risk is allowed, acceptable, you may take type 2 proximal of this 75-minute zone. Go to the 75-minute zone. Either way, you can plan your trade. But at the time of taking the trade, here you might have taken a trade by aiming this as a target zone. But the moment you might have taken the trade, all of a sudden the candle is closed inside the zone, and it confirmed this huge candle confirmed there is a rally based drop and new supply zone is there. Now you have to revise. You may not be getting 1:3 RR, but already you took the trade. Whether you get 1:1 RR or 1:2 RR, whatever you have to accept. The moment prices reaches here, you have to exit. That's it. 1:3 RR minimum is during the trade plan. But while planning the trade or after you took the trade, market is dynamic. It may change. Because of that, target levels will change. At the time, whatever the target, you have to accept. Those who feel the risk is high, they might have taken a trade in this fine-tuned 15-minute zone. Those who feel even that 15-minute zone target is high, they might have taken a trade in this 5-minute zone. Because it gave 5 minutes. See, prices went deep inside. It didn't touch the distal line. It didn't touch. Just a few paisa before the distal line, prices were started moving up and finally reached the target. What kind of trade it is? This is a WIT trade, weekly income trade. Because of this new revised target, prices quickly reached the target. When you would have taken the trade, you would have taken, let me go, because fine-tuned 5-minute zone trade is also executed. Let us assume in this candle, you took the trade. This is on Thursday. At 13.5, you took the trade. Because this is a WIT trade, this is not an intraday trade. You have to hold the trade for the next few days or maybe 1 week also. But until it reaches the target. When it will reach the target, sometimes target may reach during the intraday, sometimes next day it will reach the target, sometimes after 1 week it will reach the target. But whenever you reach, you have to exit on that day. Okay, when it reached the target in this candle, 950 candle, on 24th, and when you got the trade on 20, what is this? Oh, sorry for my mistake. Trade is on 28th November and reached on 29th November. Friday it reached. Today Sunday, the last trading session, it reached the target. But before that day, it gave you the trade. Assume if you would have taken a trade in this fine-tuned 5 minutes zone, how much profit you would have gained until this target zone. And if you would have taken this fine-tuned 5-minute zone till this target zone, definitely you would have got 1:5 or 1:6 RR you might have achieved. But anyway, that is first let us think from the points, our profits point of view. Because all these days in our analysis, you are seeing HLQ zone analysis videos. From there, you are seeing intraday profits. Now you are seeing WIT profit. But this is a revised target. That's why your profit margin, definitely it will reduce. But there is another option. It reached the 75 minutes target zone. I know some people, you won't wait until it reach the 75 minutes target zone. At 1:3 RR level, you will exit. Many people, they exit at 1:3 RR. I have seen, especially the newly land people having experience less than 3 years. More people, they aim for a large target, but they use a trailing stop loss effectively. But people having less than 3 years experience or 2 years, some struggle will be there in combining all these concepts. But you people are learning these concepts effectively. Every day you are listening HLQ analysis. At least many of you might have already mastered in these concepts by this time. Okay, first we will see what could be the profit. I'm taking the calculator and let us, this is the target minus, what is the entry? 11,005. Okay. And your entry should be here. 11,504.40. 11,469 is our distal line. But we take our at proximal line. Oops, oh my God, I didn't copy. This is 11,040 paisa, 11,500, sorry, 400. So sorry, I created some mess up. Let me copy again. So this is the entry, 11,805.55 paisa. And this is 11,504.40 paisa. And you, what's happening? Sorry, it's my bad, making mistakes continuously. 805.55 minus 301.15 paisa profit on each share. Suppose you took a future OFSS. Let's go to 0. I'm not calculating ROI, we will see the profits. So lot size is 50. And our margin cost would have been 2,94,000. OFSS on 26th expiry, December expiry. So into 50, you would have got 15,557 rupees profit in 2 days. So this is how OFSS would have given you the profit. Okay, but the point you should understand, okay, we fine-tuned and trade, but is it really having a zone confluence? What is our main zone? 75-minute zone. We concentrated on the profit point of view, but subject point of view, we need to concentrate. This is a rally-based rally with a hidden body. This 75-minute zone is having ITF confluence. That means ITF means one time frame higher, daily zone confluence. That is what our software has provided. See here, daily plus 75 minutes demand zone confluence, and also it is telling that the daily zone is having daily EMA confluence. Is it really having? We need to observe that. Okay. Generally what you do, top-down analysis. But what you have to do, first you draw the zone. Demand zone and supply zone. Whichever the day your software is giving, that day you draw. And every day, maybe when prices are nearing the zone, need not be every day. When prices are nearing the zone, you keep some alerts in trading view. The alert will be triggered on that day probably. I think SMS also they will send, SMS or email, trading view. The moment you get the alert, immediately open the chart. Check what is the still same zone is the target the software has given, or any revised targets are there. If revised targets are there, update and check you are getting minimum RR. If RR is not there, check you can, by fine tuning you can get the RR. By fine tuning also, if you are not getting RR, you just leave that stock. Otherwise, in the fine tuned area, if prices are entering, you plan your trade. If prices are started moving up before reaching fine tuned area, probably you will be missing the trade. That is okay. Excuse me. Okay. So what is that you have to do? You need to verify every time the software, whatever the report it has given, properly it is there or not. Why you need to verify? 2 reasons. First reason is confirmation. Manual confirmation. Second reason is you already learned one important concept. Maybe the ITF zone might be having multiple order flows. If it is a HTF zone might be having multiple fine-tuned order flows. If that is the case, if software always displays the most nearest zone to the current prices. Below there could be another order flow. Software won't tell you until the first one is violated. You need to identify by doing the analysis. What kind of analysis you have to do? Not top-down analysis. Software already did the top-down analysis. You do the reverse engineering, bottom to top. That is very simple. Why? Very simple. Because you already drawn this zone, definitely in this area, one time frame higher, some zone will be there. Why? Because software told. If you are believing the software, definitely it will work. Now go to the daily time frame. Daily time frame is higher ITF time frame, intermediate time frame. As per the report, see, we have ITF Confluence, daily plus 75 minutes zone confluence. So that's why I'm changing the time frame to daily. Generally people do top-down analysis. We are doing the reverse engineering, bottom to top, because our software did the work. So go to the daily time frame. In the daily time frame, is there any zone available? Yes. We have a drop. Software consider these three as a candles, base candles. This is a medium size leg candle. This is the medium size base candle. This is a tinny candle. That way software. And at the hidden body, this is a rally candle. So that's why you can draw, but see the low of this drop candle. Let me give some light color. See here, this is the daily zone. This is a drop, 3 base candles and a rally. And inside this zone is having weekly EMA Confluence. See, this is the, sorry for my mistake. This is the daily time frame, not weekly. This is a drop, 3 base candles and a rally. This is a daily zone. This daily zone is having daily EMA Confluence. See, prices reached this EMA. I told you earlier, it may not be exactly at the EMA, prices will again react. No, prices a little above it will react, or may go a little below it will react, and sharply it moved. The reason is, there the order flow, institutional order flow is there. That is actually pushing the prices. If institutional order flow is not there, let us assume they cancelled the order flow, then this zone would have been violated. That point you should not forget. See how sharply, see at this point of time, it could have been a big red candle. Do you agree? At this point of time, prices were dropping. It could have been a very big red candle. But the moment it reached the order flow, it consumed the entire demand and pushed the prices. Next trading day, again it pushed until the 15 minutes, until the daily, the 75 minutes target zone. The same 75 minutes target zone is also a daily. Here we have again a daily supply zone is there. Let me give you light color here. See, inside the daily we have a 75 minute zone. Till that 75 minute zone, prices went, and then again they were started moving up. But meanwhile, our 75 minute zone, the trade became a successful trade. Maybe. Because currently market this is a bullish trade setup. Somewhere here, few days it will move within this area, and then it will violate and go up, and finally it may reach this level. That possibility is there. Or if something wrong happened to the overall market, prices will go down and this will be violated, and finally the trend will be changed to sideways. That also might happen. Anything will happen. But the point you should understand, here you see, there is a drop, base, rally. One more order flow is there. If this is violated, you should plan your trade in this zone. This is the another 75 minute zone. This is a drop, base, rally is another 75. That means this zone is having 2 order flows. How do you know this zone is having 2 order flow? Because you are doing reverse engineering. That is bottom to top you are moving. Why bottom to top? Because software did top-down analysis and gave you the lower time frame zone. Now to find the other order flows below this zone, we are going in a reverse way. We went to the daily time frame. Here we have drawn a drop, 3 base candles and a rally candle. This is a medium size leg candle. And here you had the hidden body. If you had the hidden body, this is a very big rally candle. I know sometimes we make mistake. when you do manual way of analyzing, how you consider? We consider this as a this is a failed ERC candle as a leg-in. This is the base candle. This is the rally candle. Yes, we will convince. But software, what it will do, it will check the earlier candles. They calculate the size of all these candles. All these are all big candles. Compare it to this, it will assume what could be the medium size candle. That's why it consider all these are all medium size candle. This is a tinny candle. Tinny candle by default, it is whether it is completely filled or partly filled, it is a base candle. But anyway, it is having small body only. Even if it is having a full body, still tinny candles are by default base candles. That is what you learn in now. First training lesson or first, second or third lessons you learn these concepts. So that is the reason why I divide into 3 types of candles: small, medium and large candles. Okay, anyway, this is the zone confluence it is having. That's why cleverly our software identified all these things. So this is about OFSS. See, many of you, what you might be thinking, because software has given this supply zone and this is the entry zone, you take the trade in this 75-minute zone. Let us assume you did not do any of this analysis. Go to the 75-minute zone. You take a trade and you will be waiting for this target. But you guys learn supply demand zone concepts. You also learned market is dynamic. You also learned by the time prices reaches, maybe this target zone might be changed. See here, a new 75-minute target, drop based drop. That way, immediately what you did, you revised the target. Instead of planning your target here, you change it to this target. And the moment price reached here, you exited the trade. Book the profit. See, this kind of analysis, everybody should do it. See, by default, we can take a trade without doing any of this analysis, draw a 75-minute zone, type to proximal, you can take a trade, and you wait until here, the moment it reaches, you exit. That you can do. But what happens? If you do like that, sometimes, many times, or at least 50% times, whatever the profit you are getting here, you will be missing that profit. Because thinking prices will reach up to here, all of a sudden, market situation is changed, all of a sudden supply dominated the demand, and this demand would have been violated, and it hit the stop loss, you will exit the trade. You are supposed to get 15,000 rupees profit because you didn't do your analysis. That's why I am telling everybody should become an independent traders. You are supposed to get a profit. Instead of taking that profit, you exited the trade with stop loss. Why? Because the market dynamic nature you are not understanding. When such kind of things will happen, recommendations. Because I remember some people asked me recommendations. What I do if I give recommendations, I will tell this is the entry. This type 2 proximal is the entry. What is the target? This is the target I will tell. What is the stop loss? This is the stop loss I will tell. If you ask me the recommendation, let me tell you. How we will give the recommendations, I will show you. Because some people expecting recommendations should realize at least by this time. If it is a recommendation, I say like this. So many of you people will be seeing like this. Some people will be getting some messages from unknown people like this. Entry. Why this is entry? Because it reached this type 2 proximal is the entry. And what is our target? This is our target. It won't reach the target. The reason is here new supply is created. It may push and violate this zone. Mostly institutions will do that because they are very clever. They already created one more order flow below. They want to make sure prices reach this order flow and then again it will push up. So by the time it will hit the stop loss, all the people waiting for this target, they will exit, and all your successful profits, 15,000 profits, you won't take, and you will give stop losses to institutions, and they will take all your orders, and finally after reaching here, they will push the prices up. This is the target, right? So people who are giving recommendations, they say, why I'm noting down? I have to teach you important point. That's why I'm noting down here. Okay, what is our stop loss? Here. Maybe add some stop buffer. But time being, let me enter the digital line as it is. This is what you're all expecting, right? You means not you, many of the people. Especially people who are not concentrating in learning supply demand zone concepts. This is what you are expecting. What happens when software is generated? It is very easy for me to capture these points. I need not write. Software itself will take care. Software, what it will do? Okay, type 2 entry, if I set to software, it will say this is the entry and this is the target and this is the stop loss. It will generate an Excel sheet. Maybe in the program I will add stop buffer. With that stop loss it will tell. It will generate a big list and every day we can publish. I can create a channel for giving recommendations and I can say this is what your recommendations. Only luck only will give you. Assume this zone is violated, you are lucky because price reached and you feel, oh, recommendations are working, excellent, super, and you will tell to hundreds of people. And all those hundreds of people will get losses after some time. If it does not hit, you are supposed to exit. You never think about this. And finally, one day what happens, because the supply is dominating, it will hit this zone and this stop loss will hit. And you get profit and you get loss, and immediately we will be screaming. What we will be telling to everybody? Okay, these recommendations are not working, they are waste. Useless people. This is what happening outside. This is how traders are always behaving. They are saying, oh, super recommendations are there, not good. This is only people talk. That's why I am telling all you people, you should be an independent traders. You should understand the market. You should understand the dynamics of the market. See, software suggested this as a supply zone. This is the recommendation. We got a successful entry. But the day when you took the entry, on the same day a new zone is created. Until it reaches the entry zone, this drop-based drop is not confirmed. Still, this is only our target zone. And now a new zone is created and your revised target has to be changed. When you will identify, if you learn the concepts and time to time, if you are observing the market, what is happening to your trade, are there any new zones are created, such kind of observations, then you will get the opportunity. The trade you are supposed to get a loss, you exited the trade by taking 15,000 rupees profit. Other people will get the loss because they are looking for this target. See, it may reach. We don't know. One possibility, this will violate and it will reach. Another possibility, now supply will become strong and this will be violated and hit the stop loss. That is purely luck based. But this is a clear confirmation. What is the clear confirmation? A new supply is created. Prices reached that new supply zone. At 75 minutes time frame, exit the trade. Whatever the profit you got, keep it in your pocket and enjoy the profits. That's it. Hope you all understand the importance of why we need to revise our targets when a new supply zones are created. And if the confirmation is taken place after taking the trade, what confirmation? A new zone is created. Then you don't think of the RR, whatever the level. Maybe you may get only 1:2 RR or you may get only 1:3, 1:1 RR, whatever it is. You have to exit. Profit is a profit, that's it. Why we are doing like this? Because a new zone is created. There are higher chances this new zone may violate this zone. Because it is already a tested zone, prices went more deep inside the fine-tuned zone. Definitely institutions will push the prices up to the another zone. That is what you learned here. See here, the same thing only I explained here, right? But we are lucky this zone worked and it pushed the newly created target. Next time it will be violated, we may get another trade opportunity from the same zone. Sometimes without moving from this zone, prices violate and it will take the second entry. But in this stock, we are lucky. We took the trade. And there is one more order flow. Next time again, we will plan another trade in this zone. So this is about OFSS. Okay, on the same 26th. See, I am focusing only on the 26th report. The same 26th, there is one more stock, Page Industries. This is also a 75 minutes high liquidity zone. But see the difference between previous one and this one. Here OFSS, Petronet and Syngen. Here Syngen is, here also it is there. But anyway, Syngen I didn't select because it is just like it is flying. Prices are not coming back. They are moving. But in the retracement, we get the trade opportunity. So that's why at present I am not focusing on that. But look into the other stocks. What is the difference between this report and this report? This report is based on ITF and LTF Zone Confluence with ITF EMA Confluence. But next one, same 75 minutes zone only. Same WIT bullish trade setup only. But the second one is LTF, ITF and HTF Zone Confluence with HTF EMA Confluence. That means this stock, Page Industries, will be having a 75 minute zone, daily zone and weekly zone. And weekly zone is having weekly EMA Confluence. That setup, we are taking the trade. Okay, let's get into the chart. So Page Industries. This is also a 75 minute zone. I have already drawn the zones. See here, this is a drop. Is it drop or rally? Page Industries, rally base rally. That is 711 1030. This is the one. 711 1030 medium size candle as a leg-in and two base candles and a rally candle. Previously we discussed about this stock for in lesson 26. The special leg out candle. Price action in the leg out candle. Lesson 26. At the time we discussed. Anyway, we are not getting into that. Now our focus is on how we are planning our trade. Okay, where you need to take your trade. So those things we will be learning. So because the risk is very high in this zone, let's go to the fine tuning the zone to minimize the risk. Here you have a failed ERC base rally. Here we have. So this is the 15-minute zone. Okay, first of all, when our software is generated, our software report is generated on 26th. So 26th means here, somewhere here. So let me go to the 75 minutes time frame. That means all these price actions are completed. Because all these price actions, let me take the recent price action. Because prices came and again moved up. So we can't depend on this fine tuning the zone. So here already some price action took place here. Here we need to fine tune first. So 26th means here. This is the candle. So at this candle, our software is generated, we have drawn. So in this area, is there any fine tune zone? We need to identify the 15 minutes time frame. Here there is a drop base, rally is there. Currently this is working like a high liquidity. Many times it is taking the trades. And when it happened on Friday, 29th, prices entered into the zone, took the trades and started moving up. And what should be the target zone? A new 75-minute zone is created here. So where is the new 75-minute zone? Here. You have a failed ERC candle as a leg-in. You have 1, 2, 3 base candles and leg candle medium size part of the base. That means you have a zone like this. This is the target zone. This is the revised zone. This is okay. This is the 75-minute supply zone. So this should be the target. See, it reached and moved up. And then before entering into the zone, again it was started falling down. Because just before, the order flow is very strong because the previous candle itself is indicating this supply is having very strong. Draw a horizontal here. This should be our target. It is reaching near the zone, just crossed and again came down. And recently again from the same zone, it picked up, but we can't plan our trade. No. Yeah, we can plan our trade still because it is a high liquidity zone. Multiple entries you can take until it is violated. Last Friday, it gave again another entry. Any new 75-minute zone is created? No, same 75 is valid because there were no 75 below this. So instead of planning your trade in this, you should exit at this blue color line. Again, market goes, new 75-minute zone is created. You need to revise your target. But at this point of time, after our report is generated, it gave you 2 trade opportunities. This is the first one and this is the second one. Why we planned? Because here we have a fine-tuned zone because entire 75 risk is very, very high. That's why trade is planned. In case if your trade would have been executed, how much profit you would have got? And that too, this entire price action happened in just 2 candles. Go to the 1 minute candle. Earlier we have seen 5 minutes candles. This is 1 minute. Here it opened in this zone. Market opened itself in this zone. Anybody put a pre-order in this zone, your trade would have been executed. Because this is not an intraday trade. Some of you might have kept pre-orders here before market. If your trade is executed, you would have been a very lucky person. First candle, second, third, fourth, fifth, So here you will be exiting just before this zone. Okay, just profits point of view I am seeing. See, all these are all WIT trades, but sometimes because of the revised targets, trades are getting completed very soon. Maybe in the next day, on the same day, in next few minutes, because of huge volatility in the market. Who knows, this could be a freak trade. If this is the freak trade, your trade would not have been executed. Your actual trade would have been executed on this day. That means this could be your real trade. But this is a HLQ trade. You are taking multiple trades. HLQ trade means multiple trades you are taking on the same zone. But still, let us assume if this trade is executed. If that is the case, where you kept your trade? Here. This is your trade. This is the entry. Let me give negative because we need to subtract from target. What could be the target? This blue color line. You would have got 7,755 rupees profit on each share. So what is the lot size in case if you would have invested in futures? Page Industries. 15. Lot size is 15 into 15. You would have got 11,330 rupees profit in just 5 minutes. Of course, it looks like intraday trade, but what to do? Target reached on the same day itself, next few minutes itself. We are helpless for that. You should not treat this as intraday trade. It is a swing trade only. But you are lucky guy. In just 5 minutes, you got the profit and your profit is released for planning other trades. Rarely it happens, such kind of things. Okay, what kind of trade it is? Okay, we just drawn and looking, but actually when you do the analysis, what you have to do first? You have to do reverse engineering analysis. After that only, you should get into this trade plan. But I am showing you in the reverse way, showing you the trades first and then explaining the actual analysis. This is a 75-minute zone. Okay, what kind of trade setup it is? It is a LTF, ITF, HTF plus HTF EMA Confluence. HTF is weekly. This zone should have weekly EMA Confluence. Is it really having? Let's verify. First of all, this is a 75-minute zone. So we are going from bottom to top. The reason is this is the software report, and software did the top-down analysis and analyzed the stock and saved our time just for confirmation and to check any order flows are there below this 75-minute zone within the daily zone. For that we are doing bottom to top analysis. So from 75 minutes I am going to daily time frame. Is there any daily zone available here? Yes. We have a rally, base rally, a medium size candle rally, base rally. So this is a daily zone. So this is the daily demand zone and this is the 75 minutes demand zone. And did you observe this daily zone is having daily EMA Confluence, but we are focusing on weekly EMA Confluence. That means this zone is supporting daily EMA Confluence and also supporting weekly EMA Confluence. That is what, right? Look into the report. So in the EMA Confluence, weekly demand zone having weekly EMA Confluence. Okay, now we are in the daily time frame. Now let's go to the weekly time frame. This is weekly EMA Confluence. Where is weekly zone? We have a drop, base, rally. Draw this zone. See, this is a weekly zone, drop, base, rally. At the proximal line of the weekly zone, we have a daily zone confluence and also 75-minute zone confluence. The confluence took place at the proximal line of the weekly zone. At the proximal line, we have a daily zone. Now look into the daily. See here. Rally, base, rally. That means the order flow from this area pushed the market. Here we have a strong order flow. And daily zone is also having daily. So the success for this particular stock is multiple factors. First one is daily is having a Daily EMA Confluence. And of course, it is also having a weekly zone confluence. And a weekly zone is having weekly EMA Confluence. That is what we have seen in weekly time frame. See, price is there inside the weekly zone. And now go to the 75 minutes time frame. This daily zone is having the 75 minute zone within this daily zone. And this is also having a zone confluence with the weekly zone. Slightly it overlapped with weekly time frame. So that's why this one is got LTF, ITF, HTF Zone Confluence. All the three zones together. If all the three zones together confluence is not there, it would not have been listed in our software. Our software is perfectly calculating all these calculations. Maybe sometimes it does the calculation much better than the human way of thinking. And this zone has been listing even before also, not only today, even before also. It took multiple times, gave another. See, earlier also it gave an opportunity. Probably if you see the report before 26th, this our software would have listed. When we got this entry on 14th, right? It might have listed on this day. If you look into the 19th report or 19th, 18th report, it might have listed. 19th again it gave a trade. You analyze this area, you will find an order flow, 15 minutes order flow. So this is on 18th, right? So this is 19th. But 18th you have a 15 minutes order flow here. You draw a zone here. This is the 15 minutes demand zone. And in this 15 minutes demand zone, you might be having a 5 minutes order flow will be there. Definitely it will be there. Because such kind of zones work very well. See here, we have a rally, 4 base candles and a rally candle. See, this zone is tested. It gave a trade. You should consider this is a 75 minutes trade. And has it reached the 75 minutes target after that? Yeah, it is having a 75 minute zone here. Okay, why this blue color is actually this is the origin. Drop base, drop is the origin. That's why actually it reached the actual target. See here, this candle reached the target. You need not draw this blue color line. See here, you have a drop base drop. This is acting as a, oh, sorry. Actually, this zone is violated. That's why I have drawn here. Sorry for my mistake. Why I have drawn this 75 minutes target. This one. Drop base drop, because this one is violated earlier. That's why for the recent trade I have drawn this target. Up to here. And because of this candle reduction couldn't enter, maybe lot of order flows. That's why we have drawn this blue color line here for safety point of view. Because we need to, generally we add before the zone. So before the zone, this is the one. Because previous candle, it didn't let the prices. That means institutions added a more order flow here again. Okay, anyway, forget about this price action. This happened recently. But before that, see here, it gave a trade from this zone. when it gave the trade on 21st November 9:15. This is a dark color. Let me make it a light color. Okay. So it took a trade on 9:15, and when it reached the target, it reached the target on 25th November. This is our trade, and here you would have exited. So probably if you look into before 23rd reports, you would have got, especially if you would have referred a report on 13th November, because this is the trade we got on 21st November. Maybe 19th November, end of the day report, this might have been listed. Actually, 19th November itself, it would have given a trade. Oh, sorry, this is 9:15 candle. 14th November, it might have given you like price closed inside this 75-minute zone. But fine-tuned area, the next day it reached in the morning session. Why it gave multiple trades? Because this is a high liquidity zone. See here, Page Industries 75-minute zone is a high liquidity zone. Till 23rd November, this is 26th. Till 26th November, it gave you 3 tests. But it gave one more test on 29th November. This was the trade, the newly created 15-minute zone trade. Same day it reached in next 5 minutes. In case if this is not a freak trade. Again, same day, end of the candle, the last Friday, end of the candle, it gave another trade. We will see. Because HLQ zones, it will give you so many trade opportunities. Until the zone is violated, we take trade opportunities. Who knows, maybe tomorrow again, it will reach this target. After 2 or 3 days, it will reach. Anything will happen. What I am trying to tell you, to make you understand the power of these trade setups. These trade setups are having much power, and moreover, those zones are high liquidity zones. Even more power will be there. Of course, the order flow should be there, lower time frame order flows, like 15 minutes or fine-tuned 5-minute zones. If they are there, it is a confirmation that the zone is still alive. It is a confirmation that they will give you one more opportunity. So this is about Page Industries. Next, very interesting. Now we will look into this example. How a zone is violated and next zone is worked. Multiple LTF order flows. See, the first one is violated and second one it gave a trade. So such kind of example we will see in the next ALKEM. This is a 15 minutes zone. ALKEM, sorry. This is a 15 minutes zone, yeah. ALKEM is a 15-minute zone, drop, base, drop. And what kind of setup it is? It is a 75 minutes plus 15 minutes zone confluence. This is a DIT setup. Daily income trade. Entry to LTF is 15 minutes. ITF is 75 minutes. And look into the EMA Confluence. 75 minutes supply zone confluence. That means ITF supply zone confluence. We have daily EMA Confluence is there for this zone. And this zone is drawn with whatever the demand and supply zones it has given. Entry should be in the supply zone, drop base, and this should be the target. But this target zone is not actually worked out because a new zone is created, that we will see. First, this I am not going to tell you the trade now. First we will do the analysis. Previous to, we took the trades, checked how much profits we got, and then we did the analysis. Now, like the real way, suppose software shown you this, and you want to take a trade, because last Friday, this one has given a trade. Friday we got the trade from this zone. So before Friday, suppose if your software listed this zone, how you do analysis? Whenever software listed the zone, how you do the analysis? First we draw the zones, drop, base, drop, and this is the target zone, drop, base, rally. So this is the entry. First we will draw. After that, what we do? Reverse engineering analysis. What is reverse engineering? Against our main analysis in the reverse way. Our main analysis is a top-down analysis. From higher time frames to lower time frames, we have to do analysis. Our software does that. It analyzed everything. It just gives you final zones. So in the reverse way, at least 2 time frames we are doing, because we have LTF and ITF based strategies, Zone Confluence and EMA Confluence. So that is the reason why this drop, base, drop 15 minutes, I want to see inside the 75 minutes zone. So I am changing the time frame to 75 minutes. Now let's verify. Do you have a 75 minute zone here? We have a drop, base, drop. So I am drawing this 75 minute zone. Okay. This is a light color only. Okay. Drop, base, drop. Here we have a 75 minute zone. Maybe inside 75, here we have a 15 minute zone. This is the 75 minute zone, drop, base, drop. In this 75, we have a 15 minutes fine-tuned zone. Of course, 15 minutes again we will fine-tune with 5 minutes. So there we will check the order flows. Accordingly, we will plan our trades. But before that, still you can't accept this. Drop, base, drop, because our strategy is not based on the zone confluence alone. Apart from the zone confluence, we should also look into the EMA confluence. This drop, base, drop should have. What is a drop, base, drop? 75 minute zone. But 75 minutes time frame EMA confluence we don't use, because the last time frame for the EMA confluence should be daily. So that's why let us go to the daily time frame, not for drawing the zones, daily time frame to check whether this zone is having daily EMA confluence. So I'm going to the daily time frame. See, this is the EMA line, blue color line. Check, is this zone having EMA confluence? Yes. Because I told you, even near to the zone, we will consider EMA confluence. Our software is having that kind of intelligence. Need not just touch, a little above also, it will consider part of the zone. Okay, Friday, it looks like the zone is violated, right? But it gave a trade. How it gave a trade? Because in the, look into the (15 minutes time frame, because this drop, base, drop is ITF. This is intermediate time frame. Our entry should be in the 15 minutes. We have drawn 15 minute zone as per the software has given. So far, what software did not give? Above this zone, is there any one more 15 minute zone is there? Our software did not give that. Software always gives you the most nearest one. Maybe this ITF zone might be having multiple order flows. That's why we talked about this scenario. This is the ITF zone. ITF zone is having 2 order flows, LTF order flows. Exactly the same way, we need to check. That's why you have to draw these zones in the reverse engineering way. Why we are not blindly taking trades on these zones is to check if there is one more order flow, if institutions will trap us. They will make sure the first one is violated and they give a trade in the second one. Now go to the 15 minutes, you will find another order flow overlapped at the distal line. of this 75-minute zone. Go to 15 minutes time frame. Here you have drop, 3 base candles and a drop candle. Drop, base, drop. This is the area. We have another order flow at the distal. Of course, it looks like a LTF zone as an horizon to the high HTF zone. Of course, it is looking like that. Maybe it could be that concept. But now we are focusing on zone confluence and EMA confluence. That's why our concentration should be accordingly. Because some people say because of LTF zone we got the success. Okay, whether because of that we got success or because of this EMA confluence we got success, that is a different story. But ultimately the point you should understand, here we have another order flow. We have 2 order flows. One order flow is inside the zone and another order flow is at the distal line of this supply zone. Okay, is it having any fine-tuned zone? Similarly here, is it having any fine-tuned zone? That also we will see. And let me tell you the reasons why it is failed, this zone. Here you have an institutional order flow at 5 minutes. See, this candle is a drop candle, failed ERC candle as a leg-in for 5 minutes. This is 5 minutes point of view. If I hide this candle, you see how big it is. That's why this is a leg-in drop candle point of view. And this is the medium size leg candle. And already this zone is tested and prices went deep inside. There are higher chances next time this zone will be violated. So that is the reason why this 5 minute zone is violated. Here. But what is the next? Here also there is a fine-tuned zone. We have a drop, base, drop. This is a medium size candle, part of the you can add, but the actual leg formation is started from here. So here you have the real institutional order flow. That way you can plan your trade like this. So this 5 minute zone is also overlapped with this entire 75 minute zone. From there next time, because this is already tested, you can plan your next trade from this zone. See, prices went and then came down. But where it will reach? What kind of zone you are planning? 15 minutes zone, because this is a 15 minutes trade. This is a drop base drop and this drop base drop. Both are 15 minute zone but overlapped with our ITF zones. This is given by software because it is currently near to the zone, but this one is hiding. But whatever the one is hiding from our software, still we identified because of doing reverse engineering way of analysis. That is bottom to top. We went and we identified the actual order flow in the ITF zone. Okay, where is the newly created zone? For time being, let me delete to avoid the confusion. This is the ITF zone. Time being I am deleting. Before prices entered, what is your target? This should be your target. This is the 15 minutes demand zone. This is the 15 minute supply zone. This 15 minute supply zone is part of the ITF zone 75 minute zone. And we have seen that zone is having a daily EMA confluence. And the SIF prices went and reached. Actually, this is a short-term trade. Short-term DIT trades, probably it will hold 1 or 2 days. Sometimes intraday itself you get the profit. See, intraday one candle, one 15 minutes candle, you got the entry, same 15 minutes candle, it reached the target. And see the RR you got. You got a good RR. Approximately I am adding some stop buffer. So this is our entry, this is our stop loss, and our target should be here. It has given you 1:4.68. That means 4.5 RR it has given. Go to the 5 minutes time frame. Here you would have taken the trade. Either in this candle or in this candle, one of these candles you would have got. When at morning 11:30 you would have got the trade, and morning 11:50 the trade is completed in 20 minutes. In 20 minutes, how much profit this would have given you? Your entry is at 5628.70. Minus, and what is your target here? This zone 5593. You got 35.7 rupees profit on one future. This is ALKEM, right? So 100 is the lot size. 35.7 into 100. You would have got 3,570 rupees profit in just 15 minutes or 20 minutes. Because the trade is completed. But this is not an intraday trade. This is a DIT trade. Sometimes the opportunities we are getting because of revised targets. By proper fine-tuning the zone, we are capturing our trades. When you have to fine-tune, when RR is not available, at that time from your original zone, what is our original zone? Say maybe 75 minutes or 15 minutes. From there till your target 15 minutes zone, if the RR is not there, inside 15, again you fine-tune with 5 minutes. At the 5 minutes level, you plan your trade. But sometimes you will be missing the trades in bullish, bearish trade setups. They may not let the price, your stock may not let the price get into that. Stock means market, may not let the price get into the fine-tuned area. Just before that itself, prices will reverse and you will be missing the trades. That's why cleverly. But when you don't have RR, no other choice. You have to fine-tune till 5 minutes time frame if you don't get the RR. If 5 minutes also, if you are not getting RR, you can leave that stock. Sometimes 5 minutes is having big risk. Big risk means big order flow. At the time you can take a deep entry. Sometimes you may miss. Sometimes you will be lucky if you get a trade. All these are all techniques to make sure your trade will be executed as per our risk plan. That is important. That's why risk management is very, very important. A lot of adjustment you have to do to manage the risk. Please remember, the adjustment is to manage the risk. Sometimes if you miss the trades, you will accept, no issues. Because without management, you might have left that stock. At least by doing the management, you miss the trade. Okay. But if your trade is executed, you are a lucky person because you didn't left that stock. How we are able to get this profit? Because of this concept. Multiple LTF order flows. How we identified multiple order flows? By doing reverse engineering. Especially when you are using NeoStock reports, this reverse engineering you have to do. If you identified by doing top-down analysis, probably you would have identified all these stocks. But the problem is, by doing top-down analysis, how many stocks you will analyze? Very few. But software is doing this top-down analysis, identifying in few minutes all the stocks. NeoStock software is taking now 12 minutes time to identify all F and O stocks. 12 or 12 and a half. Because recently 250 new stocks are, 45 new stocks are added. So that's why extra time it is taking. To analyze, to perform top-down analysis for all the time frames. From yearly till 5 minutes time frame, it is analyzing 11 time frames. For 11 time frames, top-down analysis for around 240 stocks are there, including indices. For 240 stocks, NeoStock software is taking around 12 to 13 minutes time period at present. Future it will increase because new data will be added and more data has to be analyzed. And that data I am using some buffer management as per software techniques. And from that data I am generating the reports. So that's why it looks like within a fraction of a second you are getting the results. But before I show you the results, the background process, first it has to perform 13 minutes time analysis, 12 to 13 minutes time analysis. That's why our software results are working in an accurate way, in a better way. After that, human analysis you have to do as per the supply demand zone concepts you learned in your free training course. What is that I am telling you? Do the reverse engineering analysis for 2 time frames. Or only 1 time frame, it is LTF ITF Confluence. Or 2 time frames, it is HTF LTF ITF Confluence. Why? Any order flows, either above or below the zone is available. Below the zone if it is a demand zone, above the zone it is a supply zone. Because software is giving you only the nearest zone available to the current closing price. Okay. And the last one is POWERGRID. Maybe soon you may get opportunity here. This is a HIT trade. How can I, not HIT, MIT trade. How can I say MIT? Because see here, the time frame, entry time frame is daily. If entry time frame is daily, this is LTF, ITF weekly, HTF monthly. So it is a monthly income trade. So POWERGRID, this is a demand, this is a bullish trade setup. And what kind of zone confluence it is having? Weekly and daily zone confluence. Because weekly and daily zone confluence, definitely weekly zone should have weekly EMA confluence. Check here, see weekly demand zone is having weekly EMA confluence, WEMAC. So let's verify all these things are available. But our software has given you only demand and supply zones. For entry time frame, LTF time frame. So we do reverse engineering way of analysis. So what is that? POWERGRID, right? So POWERGRID Corporation. So daily time frame we have to go. So according to the software, let me delete this. This is the zone. We have a drop, 3 base candles and a rally candle. This is what our software has identified. When this candle? 13th November. Check. POWERGRID, 13th November 2024, 3 base candles. After the 21st November leg out candle. This is the 21st November leg out candle. Prices reached and reached this drop base drop. This is the drop at the hidden body. The moment you add the hidden body, this is a drop candle. That way our software identified this target zone. At present, is this target is valid? Yes, valid. Still valid. This looks like drop base drop, but not really convinced with this candle. So, okay, time being this is valid. Okay, what is that we have to do? We have drawn, after drawing the zones, what is that you have to do? Because price is not entered. Generally, when your software gives you the reports, mostly if you draw demand and supply zones, the picture looks like this. Okay, first thing what you have to do, after drawing these zones, software reports, second step you have to do, find the next higher time frame. If your software gives LTF, ITF, HTF, you need to look for 3 time frames. If your software gives LTF and ITF, you need to look for only 2 time frames. One is LTF and another one is ITF. Okay, LTF anyway, our software has given the zone. This is the entry zone. So go to the next time frame, that is weekly. And this zone, weekly zone, should have weekly EMA Confluence. This is daily EMA Confluence. This zone is not having any daily EMA Confluence because prices are moved away. Okay, go to the weekly. So I'm changing the time frame to weekly. See, here you have a weekly. You have a drop. You have 3 base candles and then you have a rally candle. So I'm drawing the weekly zone. Let me make it light color. Okay. So this is the weekly zone and this is the daily zone. So we have a drop, 3 base candles and a rally. This is the weekly zone. See, the weekly zone is having weekly. See, look into the blue color line. This is the weekly EMA Confluence. Weekly zone is having weekly EMA Confluence. Where exactly weekly EMA? Just to let me draw a horizontal line here. So here exactly at this blue color line. Okay. So at this blue color line, fine. Actually, I have a template. Weekly EMA 20. Yeah. See, a text is formed, weekly EMA. Just for remembering, I added this template previously. Okay, this is a weekly EMA. Now you go to the daily. Now you can't see weekly EMA, but now you can see this blue color line. That way we can identify where weekly EMA is there. So I'm going to the daily time frame now. Our entry time frame is daily. So here you have weekly. A little above a daily is also there. So probably in this area, there is a possibility some order flow might be there. Okay. Lower time frame order flows might be there. You may get some short-term opportunities here. Before prices are entering into this zone, maybe some lower time frame order flows may be preventing not to let into this zone. Institutions are very clever. They do. Because prices are reaching this near zone, a little below or a little above, a push will give, after that again it will come down. Meanwhile, if you want to capture, maybe lower time frame. And moreover, I am believing there could be strong lower time frame order flow in this area, in this daily EMA area. How can I say? Based on the concept, a special supply demand zone concept I explained in one of our HLQ zone analysis videos. If you did not listen that HLQ zone analysis video, please look into important analysis and strategies playlist. You will find that video. What is that I explained? There is a supply demand zone concept people will draw. They take 2 lagging candles and the higher wick of the lagging and the lower wick of the, 2 leg candles, not lagging, sorry for my mistake. People take 2 leg candles, higher wick of the first leg candle and lower wick of the leg candle, they draw a zone. Probably in this area, some order flow will be there. See, exactly that area, daily EMA Confluence is there. And moreover, how you identify? If you go to the lower time frame, one time frame lower, you may see a zone. If you don't see a zone, again similar kind of candles you will see in that area. In that case, one more time frame lower we have to go. Currently we are in daily, so let me go to the 75 minutes time frame. See, 75 minutes time frame, we don't have a zone, but instead we have two more leg candles again here also, exactly the same area. Probably one more time frame below, you might be having a very good order flow here. Now I am going one more time frame below, that is 15 minutes time frame below. Now you see, you can see a rally, two base candles and a rally exactly here. This is the 15 minute zone. This is the 15 minute zone, rally, base, rally. Probably this might be having some order flow. It may give you a short-term trade or intraday opportunity. After that, this will be violated and then it will get into our actual zone. And moreover, look into this leg out that we will discuss. But first, is there any order flow at the 5 minutes time frame? Let us check. Yes. You have a rally, 1, 2, 3, 4, 1, 2, 3 base candles and a medium size leg candle also can be part of the base. This could be your daily demand zone. See, just below the zone you have weekly EMA is there currently. And here you have, in this area, you have daily zone is also there. Let me go to the daily time frame. So you have daily EMA Confluence exactly in this area. Already prices came, maybe that could be the reason why it pushed up. Maybe tomorrow again it will further push up, or it may tomorrow once again prices enter into this zone, and from here it may give you either an intraday trade opportunity or a short-term trade opportunity. Is there any 5 minutes zone here? Here you have drop, base, rally, that way you can consider. This could be, or maybe this will be violated and reach here and again it will come down. That is also. Go to the 15 minutes zone. This is the 5 minute supply zone. Drop, base, drop. Or another possibility, 15 minutes time frame if you go. Something wrong. Sorry. I have to delete this. This is should be 5 minutes is here. But 15 minutes because we are taking entry from 15, but fine-tuned zone is the 5 minutes. Is there any 15 minute zone here? We have a 15 drop, base, drop, but this is pierced. One possibility, next time prices again and go up to here, and here you have a pro gap area. Probably till this pro gap could be your target. This could be the target. Already it took the trade, it may go up to here. The 15 minutes level, it actually Friday it took the trade. It gave you, Friday it gave you a trade from this zone. With small entry buffer, your trade would have been executed because prices entered into the 15 minute zone. They were moving. What basis we are drawing this analysis? This is not for our LTF, ITF, HTF zone related trade suggestion. Of course, as per that we identified this zone. In that zone we identified some strong order flow near the daily EMA. Go to the daily time frame. Here. But our actual zone is here. But how you plan your trade in case prices? See, it will take some time to get into this level. First, this has to be violated because this zone is having strong order flow. Because such kind of zones, when you have two leg candles, in between the leg candles, the wicks, between the wicks, strong order flows generally institutions will keep. And moreover, that area, daily EMA is there. That's why I'm giving so much of favor to this area first. Once this is violated, then only prices will enter. So at that time, where you will plan your trade, maybe you can go for type 2 proximal. If RR is there till your daily supply zone, you can take a trade here. Still, if you feel the risk is high, what you can do? Inside you can go to 75 minutes. You can identify a 75 minutes order flow here. Here we have a 75 minutes order flow inside. We have a lagging candle. You have 1, 2, 3, 4 base candles. That way here you can plan your trade. Because this is a drop candle till the lower wick. So this is 75 minutes demand zone. So this is a leg out with gap some hidden body, a rally candle. Already once it picked up the orders from this zone. But still you might be having an order flow at 15 minutes level. So this is the 15 minutes level you may consider. Here one interesting point. First let me complete this. A drop base rally. All of you please concentrate here. Now go to the 5 minutes time frame. Okay, what I expected is not happened here. What I thought is prices will come and again it will go up. That didn't happen. The previous concept, lesson 26 concept, not happened in this candle. I thought it will. I will see the zone is tested and it will go up. No, without testing directly with the hidden body, prices moved up, came down and moved up. Everything happened here. But anyway, it is part of the 5 minutes leg out. And here you have a 5 minutes order flow, demand zone. And it is a fresh zone. Earlier prices came near to this order flow. Maybe the order flow is very strong before entering into this 15-minute zone. Prices were moving. Now you can plan your trade at the 15. If the risk is within your accepted limit, at 15 minutes itself you can plan your trade. And the target could be your demand zone, because this LTF zone is a demand zone. See here, you are planning your trade here. And your 2 ways you can plan your trade. You can keep your stop loss up to the daily zone distal line or a little below with stop buffer. That way you can plan. Suppose before reaching a new 5-minute zone is created, because of that your target is reduced, then you can keep this 5-minute zone as an entry. Below the 5-minute zone, you can keep the stop buffer. That way you can plan the trade. You have 2 ways you can plan. If this 5 minutes is the target, keep this 5-minute zone distal line as your stop loss, because it will take some time to reach into this area, because there is a sufficient distance is there. Definitely it will take a week time to reach from here to here, or maybe 2 weeks time also it will take to reach from here to here. Okay, so this is about how we are analyzing the stock the moment when we get the stocks from our NeoStock reports. We are just doing the reverse engineering and finding the order flows. Is there any 5 minutes order flow is available? Here you have a drop base rally. This is the LOTL zone is there. There's one more 5-minute zone. This is a daily demand zone. See, this daily demand zone and this daily demand zone are overlapped with each other. LOTL, in this case, look into the lower time frames to find any order flows within this area. So here also the same up to here. Rally base. This is 75 minutes order flow. Up to here. Of course, you can draw zone up to this higher wick because there is one more LOTL. I just limited to the remaining candles, ignoring this candle. Now 15 minutes time frame you see, just to find any order flow below this. Is there any 15-minute structure here? No 15-minute structure here. Or is there any 5-minute structure within this area? We have a rally base, rally is there, but maybe this could be a trap. Rally base, rally. But here, definitely this zone will be violated maybe. This is not a trap because this is inside the zone. This could be aggressive trade setup. Why I am saying aggressive trade setup? Price just came near to this zone here, you see, and then gave very big push. Track could be outside the zone. We are part of the daily zone, right? Go to the daily zone. Drop base rally. So the trap is, this is not a trap. This could be aggressive. If this is below the daily zone, we will consider the traps. This could be aggressive trade setup because prices came near to this. So anyway, don't go to the aggressive trade setups when you are in the initial stage because a lot of knowledge you need to gain. I have seen some people struggle in going for the aggressive trade setup because of lack of experience, making mistakes. Always look into the fine-tuned zones. Once you get good experience, you can focus on aggressive trade setups. Because see, aggressive trade setups, a lot of observation, keen observation is required. Otherwise, it will be very difficult. Because many 5-minute zones and all, easily they will be violated. They are not fine-tuned zones. But see how we plan this zone. This kind of analysis, listen at least 2 or 3 times how I did this analysis. With the similar kind of mindset, you try to improve your knowledge. This is a fresh zone. Prices haven't reached this zone. Still how I identified this order flow. I took this 2 points I considered. One point is in 75 minutes time frame. I considered these 2 leg candles. Sorry, daily itself I considered. Yeah. Daily itself, these 2 leg candles I considered. The new supply demand zone concept. Between 2 leg candles, the wicks we are drawing the zone. Exactly that area, mostly institutions keep strong order flows. Many times. I won't say always, but many times. The possibility is there. And to add some justification to this possibility, I considered this daily EMA. Both together I combined, I took the decision. Blindly, I didn't take the decision. Maybe yesterday we would have taken a trade from this zone, and tomorrow if you get an opportunity, use it. For intraday point of view, you can plan your trades, or short-term point of view. See, that way. But when it comes to our analysis, what is that I did? From this daily zone, I went to 1 time frame higher, that is a weekly zone, and I have drawn the weekly zone drop, 3 base candles and rally. After drawing the weekly zone, once again I went back to daily zone, lower time frame zone. Why? To identify any new order flows. Here I identified drop base rally, which is an LOTL zone. And to check any order flow in the LOTL zone, I went to 75 minutes time frame. Here I identified rally, base, rally. Within the 75 minutes time frame, again I went to 15 minutes time frame to check the order flow, the strength of the order flow. and the order flow is not at all good here. So what I did, I didn't plan anything. I know that this zone will be violated. But below we identified a 5 minutes order flow which should be used only for aggressive trade setup. Why we considered? Because of this strong leg out candle and price movement. Based on that I considered. If it is a small movements, I would have ignored this. But it's a very good action. That's why I considered. Many people, what they do, you have a price came near to the zone, a small movement, then you will consider this is the aggressive trade setup, and finally your zone will be violated and it will hit your stop loss, and you say, and you may think aggressive trades are not working for you, but they are working for me. That is the way you will be thinking. I am observing many points. I consider the price movement and this zone leg out formation. What made such, even though here order flow within the zone is not good, what made to create this a big leg out? So the reason could be, I am assuming this 5 minute zone is the reason. If the risk is small, there is nothing wrong in trying next time when prices are entering into this area. See how I did my analysis. We are doing this analysis by taking proper justification. That way, that level you need to see, to get that kind of level of understanding, you need some time. You need to get some experience. Sometimes if your zones are violated, then only you will be started thinking the reasons. That way you gain experience. But many times we feel, okay, we lost the money, but we are not realizing we are gaining experience. Sometimes to get experience, we have to lose some money. There is no other option available. Losing the money means stopped out trades. When a trade is stopped out, you should not get discouraged or you should not get disappointed. If you are disappointing when your stop loss is hit, you will never become a good trader. When you get, if the stop loss is hit, you need to find the reasons what could be. That way you try to gain some knowledge from that. That knowledge will next time will help you to avoid some mistakes. Just like that, I didn't consider this zone, right? I've seen this is a leg out, but order flow is not good. But why there is a big move? Definitely this could be the reason. That kind of conclusion I made. And then only I am considering this per. Otherwise I would have ignored this. Excuse me. So this is about power grid analysis. This kind of analysis you please do. I am not talking about the analysis I did for this Daily EMA Confluence. Just I did this. I am finding some opportunity here. But the analysis you have to do on this zone. Moving one time frame higher, drawing the ITF zone, and within the ITF any new order flows are there. If order flows are there, draw those zones also. If first zone is violated, you can look for the opportunity in the second one. But for us, the second one, there is no opportunity. The second daily demand zone, the LOTL demand zone, there is no real opportunity. The reason is this is the actual order. Here we have fine-tuned zones. This is just dummy zone they created, institutions, to divert our concentration. But how we are identifying? By verifying the order flows at 5 minutes level, fine-tuned zones at 5 minutes level. Always we are confirming the real order flows, and those real order flows are giving good success for us. Keep all these points in our mind. Do proper analysis, especially the swing traders or short-term traders who are using bullish and bearish trade setups. When you do such kind of analysis, mostly you get better results, and patience is also required, because the day when you analyze, same day you won't get trade. After 1 week you will get, after 10 days you will get, after 15 days you will get. Sometimes you won't feel like those zones you will be getting trade opportunities, but some zones you will be getting. You have to keep your analysis and just observe them, that's it. If they go very, very far away, then ignore those zones. Focus on the other, maybe in latest report, some more new zones might have been identified. Focus on those zones. And also these zones will be violated. When it will be violated? when a trend changes are taking place, a major changes. See, market is going down. Let us assume now this is the time a trend will be changed. We don't know that. Just assume. Now you are planning any short trades. Those short trades will be violated. Now trend will be changed sideways. After that, uptrend. But there is another possibility. That day you are unlucky, your trade is changed to sideways. After that again, downtrend further will be continued. From sideways to again downtrend may continue. That possibility is also there. So in those scenarios, you will be getting the losses. Except that remaining times, you will get good profits when prices are entering into that zones. So it's a very good trade setup and a high probability trade setup. So everybody please practice. You have to do a lot of practice. Take the world reports and practice. Because I am publishing at least all the world reports, even some delay, I am publishing them. Why I am publishing? So that you will learn. Go to the world reports, draw the zones, and find how they are all working. If they are failed, why they failed, you need to think in that direction. Okay, they are failed, maybe the software report is not working. Don't think in that way. You have to think software reports works very well. But if they fail means there is a strong reasons. Those strong reasons, if you try to find the reasons, your experience will improve. That way you make use of these reports. When it failed, any multiple order flows are there. Below that, any order flow is there. That way you think. Any traps institutions created. That way you think. Then your knowledge will improve. Hope this information will be useful to you because we spend a lot of time on this analysis. Listen multiple times because this is a big video. Some of the important points you might have skipped. So take time, part by part you listen. That way you gain the knowledge. Whatever I explained, same way you analyze charts, taking the world reports and analyze the charts. Take the recent 1 week or some 7 or 8 days world report is there. Take and analyze them. Some 15 days back report you take and analyze them. After that, any zones entered into the zone. If they entered, how much profit they gave. Just analyze them. This is the opportunity for you to improve your skills in a much better way. Okay, thank you all for attending this session. Let's meet again in our next training lesson. Thank you.